Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 3rd of December here in 2020. And as Don mentioned, the rotation game keeps on playing. Musical chairs, all-time highs. We'll pick it up and we'll take a look at risk on, risk off money flow, and not just in the market, stock market that is, but in bonds and gold and crude oil, but also a little sneak peek at the dollar index. But let's start as we normally do with the stock market, which in terms of the S&P made a new all-time high. And that's about 3682, never been seen before. The Nasdaq joined as well, and that took place off the opening hours in the morning session. The Dow mini futures, they fell they made their high just above the 30,000, which is still an amazing number, but that crept just a little bit higher. So what we're seeing are new all-time highs, not quite in the Russell, but they're not massive. They're not powerful. They're not things like this necessarily. Remember, each time the Nasdaq index made new 2020 highs, and from the earlier part in the year, that index was making new all-time highs. And you can see how that just goes and goes and goes. In the Dow mini futures, that occurred later part of 2019, but it isn't quite occurring just yet. And the Russell again is catching up, right? The Russell made a little weaker market except for this late November bullish holiday drift or surge period. So that's where we are in the broader market with the S&P. They're up there at all-time highs, but that's right. That's the Russell and the S&P. That's not what you would call bullish, high volume, high momentum, high impulse, or high urgency. And that really does put us back in where we are and have been, which is the concept of bullish holiday drift. That's about the only way to make sense of it, to me at least. We talk about stimulus, but it's just the seasonality that takes place toward the end of the year. And that's easiest referred to as holiday drift. Now, outside of the holiday drift in the equity market, taking a look at some of our leading names today in percent terms in the S&P 500, they're names you might not think about because the headlines are all about lockdowns and how bad the COVID numbers are, and they are, but these stocks you would think would be falling. In fact, you'd think they'd be down 8%. This is Ralph Lauren. It's a clothing store. That's the number one stock percentage gain in the S&P. This is not a $10 stock. This is upwards of $100. So that stock moved about $7, almost $8 in today's session. And Norwegian Cruise Line. Remember, all the cruise ships at one point were shut down totally? And that was your COVID crash earlier in the year. The second strongest stock is actually a cruise liner, followed by American Airline, which is a travel company, Carnival Cruise Ship, which is right there with Norwegian, and then Walgreens Boots. We talk about United Airline and others that Boeing is the stock that we're probably most familiar with in terms of the S&P 100, and it's pushing up not to new all-time highs because it's coming off of a big drop. So this is that, call it what we want, COVID recovery, or just scratch your head and just be careful with these things. Things aren't making sense, maybe like the headlines suggest. If we are going to go into a period of lockdown and the winter and different little concepts, then you'd think the little stocks that fell the most right here will be falling the most right here, and they just aren't. So we'll turn our attention, as we normally do in my briefings, to stocks making new, in some cases, all-time highs, but in this specific scan, 52-week highs. It's very important to me as a swing trader to find strong stocks and try to join in them with bullish type of positions. So by market cap, again, Google and Disney, Nike, Starbucks, Morgan Stanley, we go down to, I guess the rest of them are up to you to determine, right? Freeport McMoran. Which stocks are in play for you? But these, you can certainly freeze the video and take a look at these or do a scan on your own. Are the stocks making new, and again, 52-week highs, some cases all-time highs? Just to look at a few of them as we've done. The goal is to get on trend, but not to be wild on trend. Things that are strong do tend to get stronger, and we do so on pullbacks or retracement. So there's Disney, there's Nike, and that's a good example of trending stocks in play. Starbucks is at a new swing high, all-time high. Financial Morgan Stanley, that's one of the strongest financial names we have in the market. Micron Technologies ignited straight up. And the list, Freeport McMoran, we see that play in. That's just relentless. So the logic for me, at least, is strong stocks get stronger. We want to manage our risk. We do so with bull spreads, vertical spreads, in-out spreads. We don't just buy the shares, and we don't just do it randomly. We try to do so on pullbacks, retracements, or flags, and that could be something as simple as a 2-day pullback. I prefer to put the positions on pullbacks to the 20 moving average, but if that's not in play, then we miss the opportunity or just have to go down to a lower frame and maybe trade some of these on trend day candidates. So these strong stocks are getting stronger in a market that a lot of people find it hard to believe that this equity market can keep creeping higher, but yet it does. And the simple way that I wrap my head around that, or tell myself what the positions and the outcomes, is this concept of bullish holiday drift and the ongoing stimulus. And that's playing out in the dollar index. As they deflate the dollar and print, to an extent, more money and provide more stimulus, that should be seen as an inflationary type of environment. So with the US dollar index, I know that's volatile in the middle of the COVID crisis there. The stimulus measures, and that's just the Federal Reserve, but also Congress, are providing easy liquidity, and that is serving as a downtrend in the dollar index. And this is actually bullish. The weaker the dollar, long story short, the more inflationary pressures that puts on the market. You see that in the bond market trading down a little bit lower, and that just means bond yields. We'll take a look at TNX, which is bond yields, 10-year note yield. And remember, that was crushed at the earlier part of the year, but is now starting to pick back up as rates go a little bit higher. And crude oil tracks similarly to the equity market and even like the Nasdaq. Note the Nasdaq type of pattern. It had a triangle, broke to the upside, and crude oil had a triangle and broke to the upside. So inflationary type of environments, bullish creep, bullish recovery, bullish stimulus, and a weakened dollar is going to serve, or at least will be, an environment that supports higher crude or, and generally, commodity prices. And gold is getting a bounce off of these 1,800 per ounce level. That's a key focal point we've been discussing. And for intraday traders, there's been some opportunities, but for swing traders, those opportunities are still playing out as gold travels higher. So that is kind of a broader perspective, broader look as we go through the start of December. We will have the jobs or the unemployment situation, the economic report, monthly jobs report Friday morning. That's tomorrow. And we'll just gauge how the market reacts to that. But again, where are we? Creeping, oozing, gently drifting, sailing, 3-hour tour, whatever concept it is, to the upside. And we're going more rapidly in the Nasdaq and drifting in the Dow and drifting in the Russell. As always, be careful and be safe. This is Corey Rosenblum with tonight's Theo video update for December 3rd, 2020.